So you've done the hard work, right? You've bought a building, you've run a business, or you've rented the building, and now it's time to sell. And there's a great price, and you're thinking about buying this big fancy car. Well, you know what? Before you buy that car, you may want to consider who's in the back seat, and that's the IRS. So I'm talking about capital gains and capital gains taxes. So stick around. Hi, welcome back. My name's Joe Brown. I'm a commercial real estate agent with Century 21 Elizabeth Beggins, located in South Tampa. Thank you so much for being here with me today. So if you sell your building and you get an offer of, let's say, $1 million, and you think, wow, that's $1 million, that's great. It could be bad for your bank account, right? Unless you factor in all the different numbers that affect capital gains numbers and the taxes associated with that. So that's what I want to spend some time just talking about, right? So first of all, how much did you buy the building for, right? So that's what we look at, is what is your cost basis? And your cost basis really isn't just what you paid for the building. So let's say I'm using pure hypotheticals. Let's say you buy a building for $2 million. Well, you didn't pay just $2 million. You also had closing costs associated with that. So let's say closing costs were $50,000. So you start at $250,000. That's the original cost basis. But over time, you have made capital improvements to that property. So you've put on a new roof. You've upgraded the air conditioning. Now, let me just pause here. Let's say a storm comes by and damages the roof, so you have the roof repaired. A repair is not a capital improvement, not unless you replace the entire roof. Or if the air conditioner breaks down and you have somebody repair it, that is not a capital expense, right? It's only a brand new roof, brand new AC system. If you add on to the building, those are capital improvements. So going back to the example, you bought a building for $2 million. There were $50,000 in closing costs. And then let's say over the life that you've owned it, you put $300,000 into capital improvements. So now your cost basis is $2,350,000. Well, each year you can deduct depreciation. And my understanding, again, I'm not a tax accountant. You have to talk to your tax accountant. My understanding is the IRS is going to assume you took depreciation, whether you did or not. Again, double check that with your tax accountant. And depending on the type of property, like if it's apartment and residential buildings, those depreciate over 27 years. Office buildings and other properties depreciate over 39 years. So depending on the properties, so you have depreciation that you can declare every year. Well, the depreciation reduces your cost basis. So let's say, again, hypothetical, over the course of that you've owned the building, let's say you take depreciation of $400,000. So again, you started at $2 million, then the $50,000 closing costs, $300,000 for capital improvement. But then you have to deduct the $400,000 in depreciation. So now your adjusted cost basis is $1,900,000. And so if you sell it, let's say you sell the building for $2.6 million, well, then your capital gains are from the $1.9 million to the $2.6, so $700,000. Now, just a quick word about capital gains, right? It's all about timing. So if you sell a building within 1 year, let's say you close on day 364, any capital gain is just going to be counted as ordinary income. Over 1 year, it'll be long-term gain. And then the capital gains taxes have different tiers depending on the income level. Now, most people will pay about 15% for capital gains. If the income is anywhere from roughly $50,000 to $500,000, it's 15%. Over $500,000, it's 20%. But again, talk to your tax accountant for your specific situation. But roughly 15 to 20% capital gains is taxed at. Depreciation, well, we call it depreciation, but it's recapture that you were taxed on. So the $400,000 that you took as depreciation gets taxed. At the max is 25%. So again, the numbers vary. So you may sell a building for $2.6 million and you're excited about that, but realize your capital gains that you have to pay taxes on are $700,000. And then you also have the depreciation recapture that you have to pay taxes on. So you may not walk away with $2.6 million because you also have closing costs associated with that. Then you pay taxes. One of the great advantages we have in living in Florida is Florida does not have a state income tax. So some of these other states with state income tax, not only do you pay capital gains at the federal level, you also pay those at the state level. In Florida, we are very fortunate. We are very pro-business in Florida that there's no state income tax. In previous videos, and I'll put a link to it here, people have said, listen, I don't want to pay a lot of money on my capital gains. Is there a way to protect those gains? And the answer is absolutely. And it's a 1031 exchange. I have done, I think, a couple videos on that, and I'll put the link to it here and at the end of the video, just talking about the 1031 exchange and also the DSTs. That's a way to defer capital gains taxes either entirely or in part, right? So you can safeguard, you can protect some of the financial gains you've made through the increase in equity of your building. So if you're thinking about selling a building, the first thing I would recommend you to do is to call your tax accountant, right? Don't wait till a sale is in hand. Talk to them right up front. Ask, what is your adjusted cost basis? Well, what's your tax rate? Well, what does the depreciation recapture tax look like? That'll give you an idea of what type of taxes and money you're looking for. And then at that point, once you feel comfortable with the numbers, second step is to call me. Let me be your trusted advisor. I am a commercial real estate agent with experience in the Tampa area. So let's talk. and what we can talk about the value of the building and what the market looks like and how long it might take to sell. And then we can move from there. So go to my website, joebrown.commercial.c21.com. Also my other website, which is joebrown.live, which is my WordPress site. And I have lots of blogs, not only for commercial topics, but also residential topics. I want to be your trusted advisor. So please read my blogs, find out more about me, reach out to me so we can have a conversation. I hope you found this information useful. Leave comments below about other topics or questions you may have related to commercial real estate. And until next week, take care.